Barnabas partners here in Houston. Let's see where we are. We are right here. We've got a couple of other people who are still stuck in traffic, but until they get here, we're just going to go ahead and get started. This morning is a unique event. This is one of the 4 quarterly breakfasts that our organization hosts. We exist to help Christian business people, to help nonprofits thrive. So what we have here is a collection of people from all around Houston. Many of the people who are in the room this morning are our partners. You'll see on the name tags that that's the role that they are fulfilling this morning. Our partners are the ones who financially support our organization and who are laser focused on finding ways that they can better serve the ministries and the nonprofits that God has called them to. So, we are Christian business leaders, marketplace leaders, who want to not only help our personal business grow, not only help our families be strong, not only encourage our churches to be the bride of Christ, but we see a need to reach our community by helping those nonprofits that are thriving and working in our community already to be even more effective. So we need some education. We need to know what are the differences between the for-profit world and the not-for-profit world. What are the things that shape us so that with nuance and wisdom, we can go into the nonprofit world and be most effective, applying the skills and experiences and passions that God has already brought to us over a lifetime of professional investment. So this particular morning, as we talk about nonprofit financial reporting, we're going to focus on what are the differences between that and, say, the accounting that you might have learned in a college class. And so that's what we're here for. I mentioned that the name tags would tell you who our partners are. Let me talk a little bit about the name tags. As I get to know you all, I understand that there is much more to you than can fit on a single name tag. Many of you wear multiple hats in our community, and even within your organization, you may have several roles that you're fulfilling. So as you talk to each other at the table, don't be limited by what you see here on the name tag. Dig a little deeper, find out what else this person does, find out why they are here this morning, and you're going to find that there's probably reasons why you think you're here. And then as you talk to people this morning, as you listen to the presentations, you might find out that God has some additional reasons why you're here. Often, we as Fellowship of Barnabas partners, often we talk about Barnabas from the Bible. There's a lot to be dredged up and invested in there. What a great business person who quietly served, who mentored, who was generous, who traveled with an evangelist, who himself was a spokesperson for the faith. So much good about Barnabas. But this morning, I want to talk about somebody different. I want to mention Matthew. So, what do we know about Matthew? So he was maybe not thought of as the most touchy-feely fellow in the neighborhood, and he worked cross-culturally, shall we say. He collected taxes. He was no doubt responsible for keeping accurate records, for making reports, for communicating in financial language. And let me point out something interesting. When Jesus said, "Come to me, follow me, I'll make you fishers of men," he wasn't talking to Matthew. He made that call to men who were fishermen. And so what he said when he offered that invitation was, Your fishing profession is going to be transformed. Rather than fishing for fish, we're going to learn how to fish for people. That was an appropriate ask to fishermen. When Jesus said to Matthew, "Come follow me," what did Matthew do with that invitation? I submit to you that Matthew took his ability to do reporting, to do cross-cultural communication, to deal with finances carefully, and apply that to his walk as he followed Jesus. So the epistle that the gospel that we have that was written by Matthew is full of careful financial details. When you go through and compare Matthew with the other Gospels, you will find more parables about money lending and owners of vineyards and return on investment. You'll find numbers of fish, numbers of loaves of bread. Some of those details are in the other Gospels as well, but it's a characteristic of Matthew that the author was clearly attentive to those kind of accounting and reporting details. In other words, he was an accountant who had learned how to transform those skills and invest them for the kingdom of God. This morning, we are talking about financial accounting as a tool given to serve the kingdom of God. So maybe for this morning, Matthew is somebody that we think about. He is our inspiration. He redeemed those skills and gave them back to Jesus. And this morning, we are learning how to take whatever level of professional investment, whatever proficiency we have already brought to this topic, we're going to learn how to give it even more effectively to the kingdom of God. This morning, we're all a little bit Matthews. Let me talk a little bit more about our organization. Guys, really, they brought more food out. You're welcome to. You go do food if you need to. We exist for the benefit of our partners. We are Fellowship of Barnabas partners. So primarily, our first purpose is to help our partners help nonprofits operate more effectively. But as you look around the room this morning, you'll see that there are quite a few people who are not our partners. In fact, you'll see many representatives from the nonprofit community around Houston. So why are you here? Oh, you're here because we invited you. We want you here. But why? If we're here for our partners, then what's the point of having nonprofit leaders here? Well, there are several good answers to that. One, there is content being presented this morning that is valuable not only to us, but we see that it's valuable even more broadly. And so in the spirit of largesse and abundance, there's good here for more people than just us. So let's invite some more people who might also benefit from this. You're welcome to look over our shoulder as we are learning these better practices. There's some other reasons why you're here. We need to better understand the nonprofit community in Houston. And we can just kind of think in general terms, but when we have actual people who can tell us how these issues impact them, then we understand better how we might be able to help those ministries, or we might be able to now, with greater insight and application, serve the nonprofits where we are already active. And third, we also see that there is just benefit to the kingdom of God by bringing together nonprofits that are interested in targeted themes who need to get to know each other. And so while not necessarily our primary purpose, we do see value in having nonprofits get to know each other. So the final comment maybe to make about that is that There are many of you in the room that wear both a nonprofit and a business person's hat. And so you may find yourself switching back and forth this morning between, oh, I need to know this. Oh, that's different than what I had learned before. Oh, somebody else needs to know this. And so keep all those various perspectives in your hand as you're listening this morning, and make sure that you get the fullest benefit out of what God has to tell you. So we are going to transition into hearing from our keynote presenters for this morning. But first, let me tell you about our speaker sponsor. Arcos Global Advisors has been a loyal supporter of the Fellowship of Barnabas Partners for many years, and they always provide us with someone who's going to come and tell us a little bit more about them and introduce our speaker. Some of you know Jeff Thomas, who began Arcos Global Advisors. He has been a friend of Barnabas, was a past chair of our board of directors, and is a longtime champion of this kind of work. This morning, we have Trevor Harris, who's going to come and introduce the morning's speakers.
Thank you, Nancy. So to tell you a little bit more about Arcos, there's kind of two main things I'd want people to take away. One is that we work with families to not just manage wealth, but also how to manage being a steward and how to come up with a plan around that, and pairing up with groups like National Christian Foundation and Trey Little, and just helping families give to their full capacity, and also making sure that they're doing so within the tax code and in ways that make it to where some of our CPAs that we'll be talking later are helping people structure giving effectively. On top of that, we also work with nonprofits to help get to their donor base and talk to them about how they can effectively give, whether that's giving illiquidly, whether that's coming up with a plan that best reflects them, but just encouraging that conversation. So those are kind of my two big takeaways for Arcos and a little bit of what we do. But today we have a couple speakers coming from CRI. We have Hector Maldonado, and he's currently serving as the supervising senior auditor. He serves in a wide variety of privately owned and nonprofit client bases across a variety of sectors. Previously, he was the senior auditor and supervisor at Deloitte and at Miller Grossbar Advisors, and the controller at All Trans Terminal Companies. And then we also have Michelle Landrum. She's a CPA at CRI as well. And she has an extensive experience in public accounting, as well as several years working as a CFO in the private sector. Her focus is performing auditing and attestation. You have no idea how many times I have unsuccessfully said that word today. It's in the 20s, it's gotta be. But she works in those services for clients in many industries. Michelle is also known for weighing all of her options and employing specific knowledge to find the best possible solution for her clients. So with that, welcome up Hector and Michelle.
Trevor, I want to say thank you for that great introduction. Before we get started into our presentation this morning, I want to take a little time, if you'll bear with me, to go into the Bible and put us hopefully in a good frame of mind for what's about to come. So Nancy, is it too loud? Is it? Okay. Oh. There we go. Okay, so Nancy and I promise, didn't conspire this morning. She mentioned the Gospel of Matthew, and what I picked to read from is from the Gospel of Matthew, so that worked out real nice for us. So this is the parable of the talents. For it will be like a man going on a journey who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money. Now after a long time the master of those servants came and settled accounts with them. And he who had received the 5 talents came forward, bringing 5 talents more, saying, Master, you delivered to me 5 talents. I have made 5 talents more. His master said to him, Well done, good and faithful servant. You've been faithful over a little. I will set you over much. Enter into the joy of your master. And he also who had the 2 talents came forward, saying, Master, you delivered to me 2 talents, I delivered to you 2 more. His master said to him, Well done, good and faithful servant. You've been faithful over a little, I will set you over much. Enter into the joy of your master. He also who had received the 1 talent came forward, saying, Master, I knew you to be a hard man, reaping where you did not sow, and gathering where you scattered no seed. So I was afraid, and I went and hid your talent in the ground. Here, you have what is yours. But his master answered him, You wicked and slothful servant. You knew that I reap where I have not sown, and gather where I scattered no seed? Then you ought to have invested my money with the bankers, and at my coming I should have received what was my own with interest. So take the talent from him, and give it to him who has 10 talents. For to everyone who has more will be given, and he will have an abundance. But from the one who has not, even what he has will be taken away. So I think that's a good example of what I want to spend a little bit of time talking to everybody about today, which is the idea of stewardship and how to be faithful stewards of the resources God has given us. In this reading, I think the takeaway for me at least was that when God gives us abundant resources, he expects abundant return. He expects us to take those resources, use them responsibly, to help grow the community, to help grow his word, to help grow his faithful. And I'm a huge nerd, and I love the Spider-Man movies. So it's a little bit of a variation on the with great power comes great responsibility. With great resources comes great responsibility. So I want to spend a little bit of time talking to y'all today about the not-for-profit financial reporting world. Anybody who's already involved in it knows that 30 minutes is not adequate time to give you every little detail I possibly could. I don't think 30 hours is, nor would anybody want to sit through that. But what I'm hoping here today is to give you a little bit of a picture and answer a few questions about the nonprofit financial world. So some questions that we're hoping to answer today. How much do you know about nonprofit financial management? We're going to get into a little bit of that. How does it differ from personal or corporate financial management? Do you know how financial management changes through different stages of a not-for-profit's growth? So are you actually on that question? Let me get a real quick show of hands. How many of you here are involved with not-for-profits that have been around less than 2 years? Okay. What about 2 to 5 years? See a few more hands. Anybody involved with a well-established not-for-profit that's been around for 5 or more years? Okay, good to know. So I'm hoping this information today that everybody can take a little something away from it, but also understanding that a lot of you are with established not-for-profits. More of what I talk about will be, okay, you're already at a point where you're starting to get bigger. It's what's the next step? It's not, I've got to keep the doors open for next week. It's, where am I going to go into the future? So another question, do you have a clear idea of what donors look for when they examine a nonprofit's financial reports? You know, I wouldn't be much good up here if I didn't give you a little understanding of who wants your financials and what do they do with them? How do they determine whether they're going to give their money to you or to somebody else? Because what it all comes down to is it'd be great if we had unlimited resources, but we don't. There's always limitations. So individuals have to use good judgment and stewardship in determining where they're going to give their money to not-for-profits, just as not-for-profits have to use good stewardship and judgment when they're determining how to use those resources to better the community. And then the last question, everybody's favorite. If I'm not an accountant, why should I care about financial reports? So we're going to go ahead and jump right into that one right from the get-go because hopefully if you're here and we all had some good breakfast and everybody's wide awake, I'm hoping not to put you to sleep. So right from the very beginning, I want to talk to you about why should I care about my financial statements? So in order to do that, I want to give you a little bit of background on myself. Trevor already mentioned sort of my experience in the accounting world. Also, I am involved with Fort Bend Habitat for Humanity, the Fort Bend chapter of Habitat for Humanity. I've been on their board since 2015, previously as a treasurer, now as a board member. When I first joined Fort Bend Habitat, we were in that stage where we were just trying to keep the doors open. The board of directors was very much boots on the ground, involved in the day-to-day operations. They needed every piece of information they could get you know, I spent all my time talking about cash. How much cash do we have? Are we going to be able to survive? Now, I'm really, really fortunate to say that we've solved our immediate problems, and we're at a stage in our life cycle where we're looking toward the future. We're getting ready to build 15 homes on a 6-acre plot of land in Richmond. It's a very exciting time. And then now the question is, what happens after that? You know, Harris County obviously has a huge, huge Habitat for Humanity. If anybody's driven on 610, they've seen that restore out there. We're not quite that size, but what we're looking at now is, are we partnering with, you know, other counties who maybe don't have a habitat, things like that, and starting to spread that out, spread that mission out. So the outlook and the things that I care about now are a lot different than the things I cared about then. So why should I care about my financial statements? Because it matters to the people who are giving you money, and it matters to your stakeholders. Financial statements, I always like to say, they tell a story. It may not read quite as easy as a John Grisham novel or something like that, but financial statements tell a story. They tell a story about where you've been, and they tell a story about where you're going. So understanding those and appreciating the story that's being told therein is critical to helping your not-for-profit either continue to exist or maybe grow if you're at that stage. So there you go. I should have clicked over and answered the question, but I did that already. So some questions you should ask yourself when you're looking at your financial statements. You know, where are you at? Is your mission fully funded? For how long? Like, things like that. So let's talk a little bit now about the difference between a for-profit entity and a not-for-profit entity. So a lot of the difference comes down to the language that's being used when you're looking at financial statements. And also the mission of the organization. So the mission of a for-profit organization is exactly what it sounds like. It's to make money. That's the ultimate goal. It's to enrich its owners, which is great. That's fine. There's nothing wrong with making money. What does a not-for-profit organization do? Their money is not the goal. Money is what we use to fulfill a humanitarian mission or some other type of important mission. So when you're looking at and trying to understand the difference between for-profit and not-for-profit financial statements, a lot of a for-profit is going to be about how's the business making money. A not-for-profit is the money we have, how do we use it? How are we using it? How do we have to use it? Are donors giving money that they expect to be used for a certain purpose versus just saying use it for anything in the organization? Again, for-profits is all about the owners. So the net assets, as we like to say in the company, are actually called equity. That's going to be the owner's piece of the business. In a not-for-profit, we just call it net assets. It's not, they don't exist to keep making money. They exist to use money to fulfill a mission. So all it is you have some assets, you have cash, you have promises to give, you have a truck. And then you have money you owe to either a lender or things like that. And then what's left over is sort of that net asset piece. And then there's different financial statement titles. So again, I'm not going to spend a lot of time drilling down into the details. This is just to give you a little overview. Some of you may be more familiar with this, so I apologize if I'm telling you what you already know. So I talked about in the for-profit entity, you have your balance sheet, income statement. I'm not going to read all that. The not-for-profit entity, the names of the financial statements are a little bit different. So the thing to just remember is, you know, when you're looking at a business, you have an income statement. How much money are you making? When you're looking at a not-for-profit, you have a statement of activities. What are you doing? How much did you take in donations? If you did a gala, things like that, how much did you bring in? Then what are you spending it on? That's what a not-for-profit is doing. The other thing, and this was actually something that we discussed a little bit at my table earlier this morning, a not-for-profit entity has a unique statement called the Statement of Functional Expenses. So I said earlier that donors care about your financial statements. What is one of the first things a donor looks at? They're going to go to your statement of activity, or statement of functional expenses, sorry, and they're going to say, you spent X amount of dollars on programs out of your total expenditures. Is that percentage high enough that I think you're using your money to fulfill your mission, or am I worried that you're using too much money on administrative and fundraising costs? That's a critical, critical piece for donors when they look at financial statements, is that statement of functional expenses. And understanding when you're putting that together, how that works and how you take people who have multiple roles in the organization that work on programming and administrative how you split out that information so that donors can see how you're fulfilling your mission. All that's critical. Again, I can't get into the drill down details of that in this talk, but I think the one I want to emphasize the most is that statement of functional expenses. Because as a donor, if you're looking at that, the first thing you're going to zero in on is how much money are you spending on programming. So, moving on. All right, the next question is, what if I don't have all these financial statements? Depending on the type of accounting software your not-for-profit uses, you may be able to generate certain financial statements and not others. Some simpler accounting softwares may not allow you to generate a statement of functional expenses, for example. But the important thing to remember is if you have a balance sheet, a profit and loss statement, or a statement of activities, and you have a budget, that'll get you basically to the same place. So, okay, here's a question I get asked a lot in my job. Is it okay for a not-for-profit to budget a profit in a given year? The answer is yes, just call it a surplus. But, sorry, that's an accounting joke. At least I got a few laughs, I appreciate that. But yes, the answer is yes, it's okay to budget a profit in a given year. What I would say is not okay is to have profit as a goal in the sense that you want to have more money. The reason you might want to have a profit in a given year is depending on where you are, you might be getting ready to think about the future. What's coming up? You know, am I doing a big capital campaign? Am I, like Fort Bend Habitat, am I about to build all these houses on this land? I need to make sure I have the resources to do that. So in any given year, it's okay to exceed your expenditures. What you want to do then is say, okay, I have this surplus. Where am I going with it? What am I doing with it? Is it time to expand? Is it, okay, next year maybe I'm worried that donations might go down. Maybe the economic indicators are telling me the economy's going down and I need to have a buffer. Things like that. So it's absolutely okay to have that surplus. The question is, as we go back to that stewardship item, what are you going to do with it and what are your plans? And again, you know, in the short term, maybe you just want a little more liquidity. Maybe you need more cash. You know, one thing I've encountered both through my auditing career and working with Fort Bend Habitat is a lot of not-for-profits are very cyclical. I'm sure a lot of y'all sitting here are really enjoying this time of year because now's the time for those big push for donations. You're sending out those Christmas letters and, you know, taking that warmth in people's hearts and turning it into donations that are going to help your mission grow. Other times of the year, not so much. You know, there's times a year where cash flow is going to be really lean, and you have to make sure you understand what those times are and be prepared for those. Something I'll talk a little bit about later is, you know, what's an ideal liquidity level to have? How many months of expenses do you need to have sort of in reserve? The answer is different for everybody, but I'll get into that a little bit later. The other important thing, since I'm talking about budgeting a profit, is having a budget in the first place. So for those of you less familiar with a budget and what that process is, all a budget is a roadmap saying what are your resources coming in and how are you spending them. What a budget allows you to do is it really focuses on that stewardship thing. It's telling you I have accountability and I have a responsibility to this organization. If I say I'm going to spend this amount of money on administrative stuff, this is what I really need to try and stick to. So a budget is giving you that roadmap and giving you that ability to have more visibility. Because the thing I'm really trying to let you know here and to try to really look for is clarity and accountability and visibility. The more transparent you are, the better it's going to be for yourselves and the better it's going to be for your donors. Okay, so let's talk about a few different ways financial statements are used. First one is solicit donations. And you'll find if you're further along in your life cycle, the bigger the donation you're going for, the more likely you're going to need an audit report, or at least what we call a review, which is a service below an audit. If you're starting a capital campaign, probably good to have those financial statements buttoned up and have a report attached to them. Are you trying to start an endowment? Are you building your current endowment? Are you at a point, I had a client not long ago who they received a long-term pledge over 5 years, significant amount of money. What they needed it for was building something that they needed to build in the near term. So what did they do? They took that long-term pledge, they went to a bank and said, can we get a loan with this as collateral? and then once those pledge donations come in, we'll pay off the loan. So what they were able to do was take that, get a loan, build what they needed to build, and they just paid off the loan this year, and it's great. So there may be times where you have to obtain debt, or maybe, you know, if we're talking earlier about when the times get lean, is it okay to have an operating line of credit to help for those leaner times? Sometimes the answer is yes. You know, I can't tell you that here, given your unique circumstances. You know, the answer is a little different for everybody, but if you have that, anytime you're dealing with a bank, I'm sad to say they want a little bit more than a promise. They're going to want information, they're going to want hard numbers, and they're going to want to see some level of assurance behind those so they can trust those. Last one is governance of the organization. So I mentioned a little bit about a budget on the last slide. You know, me being on the board of directors, me being the treasurer, I was responsible for creating those financial reports that were being presented to the board. And for me, I took that responsibility very seriously. I'm trying to give the board, the rest of the board, relevant information. I'm not trying to drown them in numbers. I want to give them the high points. I want to give them the cash. I want to give them the, you know, where are we going? How many houses are we building? Things like that. So the governance of the organization, especially via the budget through the board, and the approval process and also the monitoring process are really critical uses of those financial data. So I talked a little bit about this already, but when I'm talking about donors, depending on, again, where you are, sometimes maybe you're dealing with a lot of individual donors, somebody giving $50, $100, $500. Or you could be talking to business donors. Fort Bend Habitat, we rely a lot on corporate sponsorships. Hey, you want to help build a house? You want to sponsor the roof? You want to sponsor the air conditioning unit? You know, corporate donor might come in and do that. We work with a lot of churches. Churches sponsor whole houses for us. So you're dealing with a lot of different groups of people. You could be dealing with foundations. Our donation of land came from a foundation in the area. Granting agencies, federal, state, and local. So as you start to get into some of these later on down the road, they want more information and they want more assurance that the information you're giving them is correct. And then, as I mentioned already, financial institutions and the governance board of directors. So, okay, we're talking about financial statements. How do people actually get access to financial statements? So the public has a couple different ways to access a nonprofit's financial statements. It could be your own website. I know a lot of our clients put their financial statements and their Form 990, their tax form, on their website directly. Sometimes a donor or a foundation, the foundation before they gave us the land said, hey, I need your last 2 years of audited financial statements. They may just ask for them. Say, hey, I'm looking to give you a lot of money. I need these financial statements. Also, there is 990 filing that goes through Candid GuideStar to get the 990, and then other sources of financial information, Charity Navigator. So that's a great website. I spent a little bit of time yesterday refamiliarizing myself with it, looking up a couple of my clients, looking up Fort Bend Habitat, seeing how we're doing. The news is good most of the time. But what Charity Navigator does is it takes certain how you report on things, how transparent you are, what level of information you provide. Is your board of directors independent? They take all those factors into account. And if you go into their website, they give you a lot of great detail on how they weight those various factors to come up with a rating. But essentially, everybody gets a percentage rating, and the higher your percentage, the, quote, better charity they consider you. And one of the big things they look at, and I've already mentioned this before, is what's your percentage of your program expenses to your overall expenses. So I highly recommend Charity Navigator as if you're looking to donate, if you want to see how your organization is currently doing, because what they do is they take a lot of times, their only source of information is your Form 990. Now, if you talk to them directly, you can get more information on there and give more visibility, but every organization that files a Form 990 has something on there. So if you're concerned with somebody going to that Charity Navigator website and what are they going to see, it's always good to maybe take a look yourself and say, okay, they gave us less credit for these items. How do we address that? You know, is our ratio of program expenses too low? What do we need to look at? Are we not providing all the information they would like us to provide? What do we need to do? Things like that. So Charity Navigator to me, excuse me, is a great source. What is Charity Navigator? I'm getting ahead of myself, I'm sorry. I promise I read these slides and I practiced. So what do donors pay attention to when looking at my financial statements? Okay. Am I spending funds donors have given me where they said to? Okay, earlier I talked a little bit about the differences between the for-profit and the not-for-profit financial statement. This is a huge difference. Typically in a company, there's very little restriction on what the owner can spend the money on. Now, if you're talking about within the company and what expenses you can deduct for tax purposes, that's a whole other conversation. But ultimately, in terms of the money in the organization, if the owner wants to take out a distribution, they can. There's very few restrictions on what they can do with their money. In a not-for-profit organization, a lot of donors, especially your bigger donors, are not only going to say, I want to give my money to your organization, they're going to say, I want to give my money to your organization, and you can spend it X amount of dollars every year for the next 3 years. Or I want you to spend it on a new playground. I want you to spend it only on building that house. I don't want it to pay the executive director's salary. So they can put restrictions on that money that says I want it to be spent a certain way. Whenever you run into that situation, the financial statements are the place donors are going to go so they can see, okay, how much of your money, your liquidity, or your cash is tied up in restricted purpose type things. And financial statements go into a detail of these are the programs that restricted funds need to be spent for. How much of it is unrestricted? Let's say you have a board of directors that says, you know, donors aren't restricting these funds, but we know we want to do this 2 years from now. They can designate funds to go to a certain purpose. They're not donor restricted, but they're still showing up in the financial statements as board designated. So there's a lot of things that happen in those financial statements that revolve around the story. Like I said, they tell a story. They revolve around the story of what donors are giving for, what they expect the money to be spent on. Second question, am I fiscally responsible with what donors have given me? So this is going to be, I said I would talk a little bit about liquid assets and how much money you should have in the bank. Generally speaking, a good guideline is 3 months of expenses. When I started at Fort Bend Habitat, it was about a week. So, you know, I don't want to tell you there's one right answer. There's never one right answer in what I'm talking to you about. I apologize if that's frustrating. I'm just trying to give you the high points. But the answer really depends on where you're at. I talked earlier about how cyclical your donations are. Fort Bend Habitat, they're very cyclical. So there's probably, after Christmas, there's about a 4 to 5 month period we have to think about covering, where maybe we're going to get a few donations, but all our grantor organizations, all our individual donors, they came in before Christmas. So now we got to figure out how to take this money, get through the next 5 months until we hit the next piece of the cycle. Maybe we're doing a gala in 5 months. Maybe we're doing something else. So understanding your organization and having an appreciation for how much money you need. I'll tell you, the first 3 years I was treasurer at Fort Bend Habitat, I don't think I talked about anything but cash till we got out of that hole. So it's a very important thing to know and to think about. Next question, how much of what I'm given goes directly to the mission programs of the not-for-profit organization? I think if everybody here only takes one thing away from my talk today, it's that that's the most important question you can ask. I've got these resources, what am I doing with them? Am I fulfilling the program? Am I fulfilling the mission? Am I taking the resources God entrusted me with and using them to His glory and not to my own or not to my organization's own? So we talked already about the ratio of program expenses to total expenses several times. Okay, let's spend a little time talking about what's the difference in the way entities are managed. In a for-profit entity, I mentioned you're typically in the business to make a profit. You provide a service or product to a consumer in exchange for money. I think I'm not telling you anything you don't already know. In a not-for-profit entity, I mentioned you're typically fulfilling a humanitarian need to a group that usually can't afford to pay for it. Fort Bend Habitat's mission is to build affordable homes for people who, you know, work hard, they do their best. They can't go out in the housing market right now and buy a home at market value. They need some help. They're good people who work hard, who are doing the best they can do. They just need a little boost. You know, sometimes people aren't even at that point. You know, somebody's thinking about where their next meal's gonna come from. You know, somebody's hurting. Somebody's thinking that, you know, I'm a slave to drugs or any other number of vices, and they need help. You know, they could be on their last rope, and we're all here trying to fulfill some kind of mission in the community to help those people. And, you know, I hope you see that I speak with passion about this because of my own experience. But these financial statements, this stuff I'm talking to you about, may not be the most exciting topic in the world, but I promise you it's critical to fulfilling your mission. So, not-for-profit entity, you solicit donations from public, other entities, federal, state, local governments. As I mentioned, in the non-for-profit entity, you receive restricted donations a lot of times. The for-profit entity is governed by either an individual or maybe it's a small group of owners. Typically, a non-for-profit entity, you have your board of directors who are providing that. So I talked a little bit earlier about a budget. I'm going to put some people on the spot here. Can anybody give me a show of hands and tell me, do you have a personal budget and can you stick to it? That's great. I'm like, here, I have one. Sticking to it's a little bit the harder piece. So another thing you need to think about is, okay, I've got all this great financial information. I've got all this great information about the programs, the things that we're doing in the community. When my board of directors meets and we talk about all these things, should I be keeping a record of it? The answer is yes. You should be trying to keep minutes of your organization, both that encapsulate the big decisions you're making. I talked earlier about, let's say the board wants to designate money for an operating reserve or for future construction or whatever the case may be. That's the kind of thing that needs to show up in the minutes and be formally understood before you put it in a financial statement. Any significant decision by the board that would affect the direction of the organization, whether you're talking about financial or operational aspects, it's very important that records of that be kept and that it be formalized. And again, going back to everybody's in a little bit different situation in this room, maybe you're at the point in your organization where you're just trying to think about starting a board. You may not have, you know, charity navigators, all independent board members, you know, 10 or more, any of those criteria. You may just be looking for anybody who can help your organization. So one of the things I really encourage you to think about, given my own experience, is depending on where you are, that's going to depend on what you're looking for in your board mix. You know, what kind of people you're looking for. I would say diversity is very important, diversity of experience. You know, I think you've understood, if you've stayed awake with me for this long, that financial statements can be very dense. It's probably important to have somebody with financial expertise on your board. Do you have people in the, where are you on fundraising? Do you need people on your board who are going to give you access to fundraising? A lot of times, that's what makes up a lot of not-for-profit boards. A high percentage of people are the ones that provide fundraising, and that's very important. On Habitat, we have 3 different guys who are in the construction industry. Obviously, we need that to help with the day-to-day type of stuff. So understanding what your needs are and what you want from your board is going to be critical in that step of determining how do I, you know, make up my board. And the other thing is understanding that once you've made that decision, that's not a decision that's going to go on in permanence. Maybe in a couple years, things are changing. At Habitat, things were changing quickly. You need to look at the makeup of your board and say, you know, do we need more fundraisers? Do we need less fundraisers? You know, we have good construction guys. Do we need more? Are we okay? So you're constantly, maybe not constantly, but you're going to be asking yourself questions a lot about what should my board look like and what purpose are they trying to fulfill? Are they the boots on the ground board that need to dig into the day-to-day? Are they the high-level board that needs to focus on, okay, let's make sure we understand the big decisions we need to make and let you, the executive director, handle the day-to-day stuff? Things like that. Okay, and again, I got ahead of myself a little bit. How should management change as not-for-profit grows? So, I'm reading my notes here to make sure I didn't miss anything what I just talked about. So I talked about in board of directors, you need advisors. I mentioned accounting, I didn't mention legal. It was very important for us to have a legal advisor on our board. We hate to say it, but every once in a while we run into a situation where the person we've given a home to is not working out. We've had a person who was using that home to enrich themselves. Every once in a while we may have to think about starting a foreclosure proceeding, as much as we hate to do that. We needed that attorney on the board to help us with those kind of situations. And the more complex your organization gets, the more likely you are to run into legal complexities that might require you to, if not have an attorney on the board, at least have someone you know you can go talk to. And again, I already mentioned raising funds. I would say, regardless of the stage you're in, you definitely want to have some of that on your board. Maybe the CPA, me, doesn't know a lot of people who are going to bring funds into the organization. I bring a different kind of expertise. But you need those people on the board who are going to give you access to those funds, either through themselves or through people they know. When do you need to look for new funding sources? So as you start to get further on in your organization, it may go from, I've got 20 really dedicated individual donors who are giving me what I need to do my mission, to, oh my gosh, this is really great. I'm spreading God's love throughout Houston, but I'm looking and I'm like, I can't keep doing this at my current level of funding. Now I need to start going after bigger individuals. Now I need to have to start going after foundations, maybe even government grants like I talked about before. And the further along you get into that, the more complex you become, the more you need to have not just financial statements, but potentially also some assurance regarding those financial statements before you pass those along to third parties, which is one of the things we do at CRI. So really understanding where you are in your, not just life cycle, but what do you have upcoming? We've all been through COVID, and we saw what happened to donations during COVID, and what happened, everybody was hurting. They did the best they could, but everybody was hurting. So those donations went down. And the thing to think about is, okay, how do I prepare for that? It's great when you're thinking about the future and everything looks good and you're talking about, like, if I'm a church, am I going to build another campus? Am I going to build more houses this year? Am I going to house more homeless? It's great to think about those questions, but sometimes the question is going to come around like it did with COVID, and we all got caught off guard by that. How am I going to just survive? So, things like, now I'm getting to the point where, do I need a formal business continuity plan? Maybe a formal disaster recovery plan. I love living in Houston, but let me tell you, from, March through November, I'm always glued to the National Hurricane Center website, just waiting to hear about the next storm that's coming our way. So we need to have a big appreciation for what's going to happen if we run into those situations. Again, I'm not here to tell you how to put that together. I just want to give you some things to be thinking about, especially as you're growing. Because the last thing you want to do is be fulfilling God's mission and have done everything right and still get burned. Because it can happen. We don't want to think about it, but it can still happen. I mean, COVID, who thought that was going to be what it was? Nobody, right? Maybe some people were a little bit more knowledgeable than others in the beginning of the situation, but nobody knew what was going to happen there. And a lot of people who were well-meaning and were doing the best they could just didn't survive through that in terms of, from a financial standpoint. So understanding what kind of situations might come, even though you don't necessarily want to be squirreling everything away thinking something horrible is going to happen, it's good to think about things and where things might go, especially as you're growing. Okay, now we're in a case of, what if my non-for-profit is stuck and we're not continuing to grow? So you've kind of gotten stagnant. So kind of in the middle years when I was with Fort Bend Habitat, we overcame our immediate cash issues. But then the question is, where do we go from here? I mean, I know we build houses, but, do we have enough church sponsors? Do we have land? Land is a huge issue in Fort Bend County. When it's there, it's really expensive, and sometimes it's just flat not there. So when you're in that stagnant phase, that may be time to, go back to that board of directors and think to yourself, do I need to change the mix of that? We went through a couple of times where some board members said, where we're at right now, I don't think I'm bringing a benefit to the organization. And, it's time for me to step down and give somebody else a chance, somebody with a fresh perspective or a different perspective. So those are the situations. And again, I'm speaking in generalities. by necessity because everybody's situation is a little different. But if you're stuck in that stagnant phase and you're worried where you go next, maybe that's the time where you look at new strategies and you look at new people to help give you those strategies. Okay, I kind of tried to go through that pretty quick, and I hope I was informative, but just right off the top, anybody who has any questions they want to ask me? Yes, sir.
Compensated boards, what would be a decent rationale other than Bank of America or someone like that to pay people to be on the board?
That's a great question. Michelle, do you have anything you can speak to about that?
Sure. So when it comes to
Since we're recording.
oh, absolutely.
Sorry.
Let me get up here. In regards to compensated boards, a lot of nonprofits, especially nonprofits that we deal with, they have a mission that they are trying to carry out, and their boards are made up of volunteers. When you get into compensated boards, you're talking about significant in size. It's almost like you are paying for their expertise, but you're just not paying fair value of that expertise. So there's a nominal amount that you end up paying those board members, but it's not what you would have paid it had you had to go out and hire them directly in order to provide that service to you. What I can do is, if you've got your specific example or specific situation, I can chat with you after the meeting and get you a more definitive answer. But in general, where we've seen compensated boards, it's been in very large organizations. It's been targeted in regards to who they're bringing in, and they're bringing them in for their specific expertise and paying them a nominal fee to be committed to their organization. You're welcome.
What other general questions do you have?
I have a question about, from a funder perspective, should a nonprofit have an audit every year, or is it okay to do an audit and then just have a review and then do an audit, every other year or something like that? What's the best course of action?
Sure. So what we do when we chat with nonprofits about the type of service that they need, we look to see what your donor base is. Do you currently have a requirement for an audit, or will a review do? We have one client where they get an audit once every 3 years, and they do compilations in between because they don't have a need other than they have a report available for their congregation. It's a church, but they make sure that at least once every 3 years, their governance said, we want somebody to come in and dig deeper and make sure that we're still on the right track and we haven't missed something major. And they do that from a budget standpoint as well, because they don't want to spend that money on an audit. An audit is much higher in scope. We're digging in, we're asking questions. A review is where we come in, we ask questions, we do some analytics, but it's a little bit higher level in regards to we don't dig into the details unless something doesn't make sense. So when you talk about your donors and look to see what they have, a review provides a second set of eyes and a limited level of assurance in regards to the numbers are accurate, we can rely on them, but we're not digging in all the details. So you might be able to say, let me just get a review. But if you don't have a donor asking for your financial statements, then you may not need to get something formalized. What we found where clients will come in and ask for those is when they're gearing up, because now they're going after a new donor, and that donor is going to want that type of level of reporting on an annual basis to make sure that I'm giving you $50,000 or I'm giving you $100,000 for your mission. I want to now know that you're being good stewards, and the information that you give back to me, I can look at and compare you to others that I'm also giving money to, and how are they spending and how are they using. And so that's where a lot of times nonprofits, when they ask for those reports for donors, it's because somebody has come in and said they would like for that, or there is a requirement that's attached to that gift that requires them to report back after receiving the funds. Did I answer your question?
I might have missed something, but the programming versus the administrative, did you give a number that seems to be reasonable in the world that people are looking at? And then also, if people have year-end closings for their nonprofits at different times, what is the advantage or disadvantage of those? How does that work?
We're going to address both of those questions. Let me just hold the room. If you
Right, so, we say a good practice is to be somewhere around 70% or more. But again, we do go back to, it is the size of your organization. If you're in a capital campaign year and your executive director is spending a ton of time fundraising, your financial statements may look different than if you're in a normal operating year. But again, what Hector said, you have a story to tell, you tell the story. You're being open, you're being honest, and you know that you're gonna have some of those cyclical items. The reason why we say 70% as a goal is because you want to strive to get there. But depending on where you're at in your life cycle, that may take a year or two to get there and get the resources that you need so that you can expand your programming and so that you have more funds to spend in programming. Maybe that you need to do more fundraising in order to raise funds for that programming so that you can hire the people to then carry out that mission. So there is an instance where your percentage may be a little bit lower, but again, that's a goal. It's not the end-all be-all. It doesn't mean your organization's gonna fail. It just means this is something you should know so that you know what you need to do to work to get to where you want to be. And how are you telling that story to your fundraiser or to your donors in order to raise the funds that you need to get your organization to that next level.
Some of those changing goals can be reflected on your 990.
That is correct.
And so anybody who then accesses your 990 will have a nuanced understanding of what's going on.
Yes, so the reason why we had mentioned Cherry Navigator is because we're accountants, we understand how to read financial statements. If you're in the nonprofit world and you're in an accounting role, you understand what it is that you're looking at. But if you're starting out, you may not fully understand what your numbers are. So if you have an understanding of your financial statements, and you're having conversations with people, you can do that. But with the younger generation, a lot of times the younger generation may go, okay, well, I just want to go to a website. Oh, the number here is 70%, but this number over here is 90%. I'm going to go with 90% because that sounds better. The way they make decisions is very different. So when we mention Cherry Navigator pulls up, Charity Navigator, I'm so sorry, pulls up information. You're automatically added if you file a 990. Not a postcard, but if you file a 990. So if you don't know what your number is, it's possible your number may not be reflecting what your organization is capable of doing and what information you have available that would get your number higher because you just didn't look. And so they take information from the 990, but there's also other information that the organizations provide to get that number higher. So the reason why we bring it up is because there is a whole new generation that makes decisions very different than probably what we're used to seeing. And so knowing that that's out there, it's good to know, and it's good to look at, and it's fairly simple to submit the information in order to get the number that you're looking for. So, and when I say the number that you're looking for, the criteria when you go out and look, do you have a whistleblower policy? Do you have an independent board? Some of these things you're building in while you're building your nonprofit. It's just a matter of submitting the information to check the box so you get credit for it on this website.
Okay, Rob, we got another question.
You get the year-end, how that varies, what's the advantage, what do people look for when they're looking at that? I mean, or how does that affect the way people read?
Sure, so when people are considering what year-end to use for their financial statements, a lot of times it goes with what is the mission that they're serving and what is the purpose of what they're doing, and how does that work with their cyclical operations. So for instance, when we deal with schools, churches, a lot of those will, schools that have churches that have schools attached to them, sometimes what we'll see with those is they have a June 30th year end because they're trying to follow the school cycle. In regards to some other nonprofits, they know Christmas is a really heavy season, and they want to make sure that they get a full cycle, both the downturn as well as the upturn in their business cycle within one fiscal year. But they don't want to get stuck with having to wait the entire year to see what that's going to look like. It's very easy to get your year-end changed on a nonprofit. It's a matter of submitting a form to the IRS. And so a lot of times, we've seen people make decisions where they're getting audits done. A lot of for-profits have year-end, calendar year-ends. And so if they're trying to get their financial statements done within a 90-day period or something like that, they end up paying premium prices because they're fighting with companies who have money. But if they move to a June 30th year-end, they're able to save on fees because now they're not fighting for available resources to get their audits done or their who's done. So we've just seen instances, different decisions, or different decision-making reasons for why nonprofits have chosen a different one, but it usually is driven by their mission, their donation cycle, or it's just, I want to save some money, so I'm going to move it. Because I know I need my audit, or I know I need my review to continue getting donors, funding from donors, and so I'm going to save wherever I can so I have more money to put towards the mission.
We've got time for one more question, yeah? Gabriel?
Hector, thank you for your presentation. You really did an excellent job of taking complex information and making it digestible.
I appreciate that.
Yes, thank you. You can tell you put work into it. My question is, well, I'd like your opinion on something, and that is, how emboldened should a nonprofit be to request that the donor change their stance on restricted funds? So if they come and say, I'll give you $100,000, but it has to go here, should a nonprofit, dare I say, push back and ask them to unrestrict those funds?
That's a tough question. I'm glad you didn't give me any softballs. It's gonna, again, a lot of it depends on the circumstances, and I'll let Michelle speak to this too, because she's got a lot of experience. For me, my main concern would be, is that a short-term gain and a long-term loss? So if a donor's concerned that their funds aren't going to be, that you're going to ask them every year to walk back the restrictions when they really have a passion or a desire to donate for a specific program, you do run the risk of kind of alienating that donor. The other side of that coin is if it's driven out of necessity. You know, during COVID, maybe there were restricted donations that you just needed for operations because you had to keep the doors open. You can make a really good case at that point saying, hey, I'm coming to you, you understand what the situation is, can you help me out a little bit? And if they're seeing it as a partnership and you're still working towards the goals that they donated to in the first place, they're going to be a lot more likely to want to do that. So I think you have, but I would say my diplomatic answer is tread carefully, because you don't want to get in a situation where they're going to think you're going to do that on a consistent basis.
So to add on to his, because he's absolutely right, we actually had an organization where this happened. They were trying, it was a college, a nonprofit college. They were trying to meet certain financial goals in order to obtain accreditation. And they had a handful of donors, probably 4 or 5, that consistently donated to the organization very large gifts. They were very generous and they were longtime donors. But one of the hurdles that they had was they kept getting restricted dollars and not operating dollars. And they really needed operating dollars to meet those goals to obtain that accreditation. So that was one of the things that they did, was they went back to their donors. They had really great relationships, and they laid it all out. And they said, this is what our plan is. This is what we need to do to get to that next level. And while we're very thankful for the gifts that you've given, we need help in order to get to that level. Can you help us, and would you be willing to do this? And what they've done is they've been able to partner with those donors and be more strategic with, hey, this is where we're landing, and they've done some planning in regards to, okay, this year we need an unrestricted gift, next year we may need a restricted gift. And so they've been able to navigate that relationship well, having a little bit more detailed conversation with them, laying the plan out, and getting their buy-in in that regards. The other thing that I would mention is, when you do have to go back to a donor, we have another client who's a church, and they receive tons of gifts. And when you coming through tithes, you have different designations that are put onto checks, and you just, okay, I've got to track all these different ones. Well, from an accounting standpoint, that becomes a nightmare, especially when you have one person who gives $1,000 once a year for something really abstract that's not necessarily under the umbrella of what the church programs are. So one of the things that we have coached people about doing is going back to that person and finding out, is there a way for you to fulfill what they want to do, but within the realm of the programs that are being offered? And there's been instances where organizations will receive a non-cash gift, like, oh, I want to give you this vehicle. Well, I don't need a vehicle. So can you sell it and maybe give me the proceeds? Or maybe I have to say, thank you, but I think there's another organization who could really use that. We just can't take that resource because we don't have the ability to do something with it.
Thank you. Dennis, is there?
Oh, I have a
Karen. Okay, this is our last question, and then we'll have a KSI.
So that's a tough question to answer because it depends on your mission. So if you've got a mission where you are, you have funds that you're going to spend, you know you're going to spend it every year, you've got resources that you're using to help carry out that mission, having a high dollar of restricted funds in that regard is probably not that big of a deal because you'll end up spending that within the next year or the next 2 years. If you are struggling, where we see nonprofits struggle more so is they don't get enough unrestricted funds to cover operations, and so they get all of these restricted dollars to help them with their missions, but then they end up getting limited for what's available to spend every day, keep the lights open in that regard. And so that's where we've seen some people when they take donations. I had one nonprofit, they did not have any significant fundraising activities where they went out and fundraised at a gala or they fundraised at a specific event. But what they did was they posted on their website that any gift over a certain amount, that there was an administrative charge for facilitating that gift, and a portion of that was allocated to unrestricted. So when people are reading the website, any information that they are giving to their donors about how to give to the organization and what thresholds to do, that was one of the ways that they were able to help manage the unrestricted piece, because they did a lot of mission work overseas, and they would go around and they would tell people, this is what I do, this is what we do, and people would give in droves to do that mission. But then it's like, well, wait a second, we have to book the travel, we have to manage the expenses, we have to manage our partners, making sure that the way that we're spending funds on these missions are being managed appropriately. A lot of that was at an administrative level and not necessarily at a program level. And that was one of the ways that they navigated through that piece, because they found themselves struggling. I've got a ton of restricted dollars, but I can't spend it where the organization needs it, and I'm not able to carry out our mission because I can't do what I need to do to make sure that that happens.
Michelle and Hector are going to be available to answer some other specific questions later on. But for now, would you join me in thanking them for... And now we have the highlight of our morning. This is when the people that you have met with, that you have introduced yourself to at your table, and you talk about how to apply the things that you have learned. If you have specific questions that you want to know further about, this is the time to begin addressing that. This is the time for you to think about all the different places that God has called you to be invested and how you can apply some of the things that you have learned this morning. This is also a time to then share those needs with other people who are at your table. And part of this table discussion time will be at the end devoted to praying for each other as you're asking God to illuminate you, to give you greater wisdom, and then greater courage and insight in growing in your financial management. The clipboards that have gone around and may continue to go around at your table have a place for you to jot down specific needs that your organization has, or specific obstacles that you are facing now as you are thinking about leadership in the nonprofit sector. Make sure you write those things down. I'll tell you why later. For now, we're going to have 15 minutes of table discussion and prayer time. As your table discussion wraps up, take about 3 minutes to pray for the things that you have learned about each other. All right, what a great morning. I know that discussions will continue, prayers will continue, inspiration will continue. As we head toward our conclusion, there are a few things that I want to make sure that you know about. First, we are a fellowship of Barnabas partners, and we're growing. We've got 2 new partners who are not able to be here this morning because they're dealing with an aging parent out of town. But I want to make sure that you know about Bobby and Jamie Hillen, and you'll get an opportunity to meet them at upcoming meetings. Speaking of upcoming meetings, our next quarterly breakfasts will be at the end of February and at the end of April, right here in this room. We're going to be talking about some really cool topics. Guess what we're going to talk about next? Founder syndrome. That's like when I started this thing, it's so great, and now I don't know how to let go of it. I don't know how to submit to the board. I don't know how to scale my organization. What do I do? Or maybe there's some other ways that that can manifest itself. How do you plan ahead so that your organization will outlast you? How do you unentrench from founder syndrome if that's the dynamic you find yourself in? We've got all kinds of great things to be talking about next year. And as always, these are topics that community and business leaders need to know in order to more effectively assess and help nonprofits. Those quarterly meetings are going to be right here in this room at Houston's First, and as always, they'll be open to both business leaders and nonprofit leaders from around Houston. You know, our partners are invested in nonprofits here in Houston, but we're also invested in nonprofits around the world. And wherever it is that God has called you to serve, we hope that you can take what you learn at our breakfasts and use that to help those nonprofits thrive. In addition to our breakfasts, we have some partner-only events. Typically, we meet the first Friday of every month, but not in December because December. However, come January, we're going to start up again, and those of you who are partners will be getting emails about that. The cost of that is, of course, included in your partnership. And at those lunches, we've got some strategic things to do, as you might guess. One of the things that we do is to go through the needs that have arisen at our breakfasts. So those clipboards that you circulated where you said, here's a problem I've got, here's where I need some help, we talk about those things. And we say, all right, we're seeing a lot of comments about a certain issue. Maybe that coalesces into the topic for an upcoming breakfast. Or maybe, that's an interest that I have. I would like to call that person and follow up and see how they're doing. Sometimes there's a quick solution for the obstacle that's arisen, and we're able to solve that in the context of those lunches and the follow-up. Sometimes it might just be that our partners will contact the person who mentioned this particular obstacle and say, let's have coffee. I maybe have some resources, but mainly I'll walk with you through this as you are facing this obstacle. And so we want to always be thinking about how can we help our people help nonprofits. And so the discussions at those lunches are a way to do that. Now, I want to introduce you to one of our advising partners, Kathleen Pennington, and she's one of the ones whose name tag could have been very long. Every time I find out more about Kathleen, I'm thinking, okay, how does she have time for that? But God has multiplied her time, and she is going to tell you in particular this morning about one of the organizations that she is involved with. Okay, Kathleen? Yep, you just keep doing that right-hand clicker.
Well, good morning, everyone. Hector's a hard one to follow, but I'm with 100 Shares Houston, and I have been a partner with 100 Shares for 5 years, and I've been on the board now for 4 years. And what 100 Shares Houston is, let me put this, click here, is a Christ-centered organization that awards financial grants to Christian nonprofit ministries in the Houston area that serve people in need and share the gospel. And 100 Shares was founded in 2014 by Sarah Lewis and Nancy Lisenby. And it's a women's giving circle. And what the premise is that women, we get a group of women together, and each one of us give $1,000 with a minimum of 100 partners. So the goal is to have $100,000 that we're able to grant each year. And $1,000 is a lot of money as a partner to give, and I'm sure for a ministry would love to have $1,000, but my goodness, if you could have $50,000 or $100,000, that could sure make a big impact in what you're trying to accomplish in your organization. So each year what we do is we commit to giving either two $50,000 grants or one $100,000. And we are in the process right now, we try to recruit more partners because the more partners we have, the more money we're able to give away. In this past year, we had 137 partners, and our grant recipient was Eyes on Me, and so Dennis Turnipseed is affiliated with Eyes on Me, so if you want to speak with someone who's gone through the process, Dennis is a great person to speak with, but we had 137 partners, so we had another $37,000 that we were able to give to our other finalists. So the grant criteria is for an organization, obviously, that's serving in Houston, and the organization must be proclaiming the gospel. The initiative for what you're asking the money for must be completed within a year or two. And the initiative must be something new or an expansion of an existing program. It can't just be to pay for your operational budget. But if you have, a school that wants to expand and have a new classroom, or another, we've bought buses for transportation for organization, things like that. So the process is, we have a website, and so the grant applications open up in June, and it's a two-step process. In June, we have a letter of intent, which is a very simple, I think it's 2 pages long, which helps both sides, so you're not going through a lengthy application process, to just make sure that you meet our criteria. And then in July, we then say, hey, you guys qualify, please go ahead and complete the application for us. And so that information is available on our website. Then through August and October is when the board, there's 18 of us on the board, is our vetting process. And the one thing I can share with you about this organization is we take this vetting very, very seriously, and God leads the way. We are, everything we do is done with so much prayer and so much care. Through the vetting process, what Hector shared today, I shared with my table, it's perfect, because that is all of the information that we look at very carefully. And we had this past year, I think we had 42 ministries apply, and through the letter of intent, we got it down to 18. And then what we did is each board member took a ministry, and we went out on site and visited with the executive director, because you just learn that much more, did a deep dive into that organization, and then we have a vote, and we narrow it down to 4 finalists. And this year, we have now narrowed down our 4 finalists, which this year our 4 finalists are Houston Pregnancy Center, Nehemiah Center, Project One Day, and Sharpen Recovery. Then in the fall, which we just had last week, we have a coffee in which the 4 finalists present. It's about a 7-minute presentation. We invite all of our partners to come and hear about your organization. It's 7 minutes where you just tell a little bit about your organization and how this grant will help take you to the next level. After the coffee, we also have a couple happy hours, because for partners, not everybody can attend a fall coffee in the morning during the week. And also it's a provide another opportunity for Christian women to have fellowship, but also to have an opportunity to learn more about 100 Shares. And in the October coffee, Kirk Craig from Agape Development came and spoke, as they were our first recipient in 2015 for $100,000. And then in November, Valencia Lewis spoke. Last night was our happy hour, and they were the recipient for Angela House. So after our November, then what we do in January is we have site visits. And so for our 4 finalists, we go out, and for 1 hour, we invite all our partners, and we tour go on site, tour, give us a presentation, whatever you want us to know about your organization. And then we do a survey of the people who attended those site visits, and then more prayer, more prayer, more prayer. We may come back for more questions, and then we have a vote to come down with our finalists. And then in spring is when we then present our awards check. So March 6th is going to be our, where we're going to actually give out the grant for either $100,000 or to $50,000. And this is our 10th year. We've already given, thankfully to generous supporters, over $1 million. Super excited that this is our 10th year. The March 6th luncheon is going to be at the Junior League. We're inviting all of our previous grant recipients to come and share in that celebration with us. And anything that we do, it's open. You don't have to be a partner to attend, and we just really like to get the word out. If you know a ministry that might be interested this coming summer to apply, or if you know someone who might be a partner. And we'd just love to hear from you. If you'd like more information, there is our an email that you can send it to, and there's also flyers back on the table with more information with our website, as well as you can follow us on social media, Instagram, Facebook, all the things. So just to God be the glory. We're so grateful. God's just blessed us. And the one thing I'm just going to finish with is Houston. There's just so much ick in the world that we're hearing about in the news right now. And what 100 Shares does, I would have never known about Eyes on Me if it hadn't been for 100 Shares. I would have never known about Angela House. I would have never known the 40 ministries that applied. And what's so amazing is there's so much good going on in Houston, and just so grateful for a lot of the people in this room of all the things that you do day in and day out, and just really appreciate that, and thankful that 100 Shares that we can help come alongside you and support you in your missions. Thank you.
Thanks, Kathleen. You can see how our partners are able to take the kinds of things we talk about at our topics and then spread that good to make their organizations run more effectively. And so let's talk a little bit more about money. Fellowship of Barnabas Partners is not a funding source for the nonprofits that we talk to. We point people to other organizations like 100 Shares if their main goal is to raise money. Instead, we want to offer information, encouragement, strategic help to those nonprofits. Not because we're not nice people, not because we're not financially generous people, but because if we also are in the business of writing checks, who's doing the strategic part? Here we are uniquely poised to do a certain mission, and that's what we want to focus on. So we are grateful for people who are parallel lanes on this same highway. Trey from National Christian Foundation. If you don't know NCF already, make sure you tap him before you leave. There are so many ways that we are all working together to strengthen the leadership, to provide the financial resources, to overcome organizational obstacles so that our community will be stronger. Let me talk briefly about our board. They represent this span of interests that Hector talked about this morning. Our board is growing, and we have opportunities for even more to step onto our board and replace the ones who are timing out. And I invite you to talk to Dennis or to talk to me if you would like to be part of the leadership for this organization. Let's talk. As we continue to talk about money, let's talk about what it means to be a partner for Fellowship of Barnabas Partners. We don't have Black Friday sales. We don't participate in Giving Tuesday at this point. We don't have an annual fundraising gala. We know that you are busy organizing those kind of initiatives for the organizations that you're part of. Instead, we are sustained by the regular, quiet, behind-the-scenes contribution of our partners. Becoming a partner is easy. You can go to our website and click to join the partners. You can pick up some information on the counter at the back. Those regular donations support our modest budget, and anything that's left over from our operating expenses goes back to help our partners become more empowered. Things like supporting conference registrations and such. There was something else I was going to say about that. But talk to me after if you have any questions. Dennis, was there something you wanted to say as we're closing out? All right. We are grateful that you are here today. There's a reason why God brought you. As you leave, be thinking about your prime takeaway and how you're going to implement it.
Hey, so a couple of real quick things, and an unsolicited plug for 100 Shares. Having gone through that process, I will tell you, we met such great, wonderful, godly women that I went home and told my adult daughter, you need to get involved. She said, great, Dad, I don't have any money. Well, so I ended up sponsoring my daughter to get involved in 100 Shares because that's the type of women I want my daughter hanging around. So if some of you that have adult children, adult daughters, that's a place they ought to hang around. Second thing is, and the accountants in the room will like this, that they gave us a restricted grant. I got to make sure I used all that money this year so I don't have to put it on my financial statements. All right, Michelle? We've gone through that conversation before. The last thing is I will tell you that, you know, if you watch the news, you think there's a whole lot of bad stuff going on around Houston. If you turn off the news and you get out, you'll see there's a lot of great things going on around Houston. That Houston really is a city of God. That doesn't happen by mistake. That happens by intentionality because of the people in this room and the people that you know. So for Houston to be a city of God that we all proclaim it to be, we're the ones that have to lead that charge. So as you go out today as nonprofit leaders, as marketplace leaders, I encourage you to be the light and to show the face of Christ to those that are out in this community that don't know Jesus, that are struggling day to day to survive, that have obstacles and burdens they have to overcome. Because it's the overcoming of those burdens, so not only will you be blessed yourself, but they will be blessed because they will then start moving in the direction of who God created them to be in the first place, and that's how we become a city of God. So God bless you in your efforts. And the last line on the minute by minute that Nancy put together, she told me to come over and say, go home. So go home, but stop somewhere and make a difference. Thank you all for being here. We look forward to seeing you next year.